considered as investment advice. Talking about investment advice, why invest in crypto now? So first of all, my name is Talal Tabba'. I'm part of the founding team at CoinMina previously, and I'm also part of Jibril, which is a blockchain development company. I'm also on the board of directors of MEPS, Middle East Payments Company, which is a traditional financial company, I guess, which allows me to see how the old world works and why crypto is so amazing. Prior to crypto, I used to work in financial advisory. I worked for PricewaterhouseCoopers in Abu Dhabi, and then I worked for a family office in Saudi Arabia. By education, I'm an industrial engineer. But anyway, enough about me, and now a bit about CoinMina. So CoinMina is a regulated exchange under the Central Bank of Bahrain. We launched about 2 months ago, and yeah, excited to hopefully become the biggest exchange in the Middle East, or biggest. Even our goal is to become not only a crypto exchange, but a financial services provider. Before going to CoinMina, I want to talk about a couple of concepts that are often misunderstood. And I want this session to be as engaging as possible. So I will stop after a couple of slides and open up for Q&A along the way, because I understand that a monologue can be boring. So first of all, what's the difference between crypto and blockchain? Those concepts are often not always understood. So crypto uses blockchain technology, but not all blockchains have crypto. Crypto is used as a way to transmit value. It can represent a currency or can represent an asset. And then the underlying technology that it uses, which is blockchain or distributed ledgers, was first invented with the launch of Bitcoin. Basically, blockchains are a new way to store data. Historically, over the past, I guess, 5,000 years, we've used centralized databases to maintain all our information. Blockchains proposes a new way where this information is stored in a decentralized manner. So why is this important? Why is storing data in a decentralized ledger important? Because it solves something called the double spend problem. Over the past, I don't know, since the invention of the internet, there's been many attempts to create digital cash. And all of those attempts failed for the same exact reason, and that is the double spend problem. What is the double spend problem? Today, if I have a 100 dirham note in my pocket and I give it to Ashiqa, I can't spend that 100 dirham note again because I had physically passed it over. If I have 100 dirhams in my Emirates NBD account and I send it to pay an invoice, I can't use that 100 dirham again. What happens when I send you a picture on WhatsApp or a PDF file on WhatsApp? I actually make a copy of that file and I send you a copy and I keep one with me. So now there's two versions of the same digital asset. Imagine you could copy and paste US dollars, or you could copy and paste gold. It would be a disaster. So blockchains allow us to solve the double spend problem by basically creating digital scarcity. Bitcoin is the world's first asset that is digitally scarce. Right? This is a very, very important concept that I think I probably talk too much about, but it's very important in order to understand why crypto is so revolutionary. As I mentioned, we previously used intermediaries as the solution to the double spend problem. Because if I spend my 100 dirhams, Emirates NBD or any bank is responsible to verify my identity as the sender. They're supposed to verify the identity of the receiver and make sure that the money is moved from my account to their account. We use an intermediary in order to facilitate that functionality. In crypto, it's peer-to-peer, meaning I don't depend on an intermediary. I depend on the blockchain to make sure that that's the case. So why is it called a blockchain? The name is actually quite intuitive. Every series of transactions are packaged in a block, and once that block is full, it's placed on the blockchain. Quite simple, right? The Bitcoin blockchain was created with the initial Genesis block in 2009, and every 10 minutes, a new Bitcoin block is created that includes the transactions that were done in the past 10 minutes. So actually, before I move to Bitcoin and Ethereum, let me stop and I know this is not a very traditional format. I should keep Q&A until the end. But again, we're in crypto, so nothing we do should be traditional. And I know I can go off on tangents, and I want to make sure I don't do that. So we'll stop for questions if anything's unclear, or if you have any questions on what I just said, please let me know. And if we see that there's no questions, I'll continue with my monologue. All right, going once, twice, done. Okay, so the crypto has many different use cases. I'll start off with the two most popular ones, Bitcoin and Ethereum. Bitcoin is basically a decentralized store or a unit of value. The best example is this world's digital gold. Similar to gold, Bitcoin is scarce. It is not easy to forge. And the supply, the incremental supply of Bitcoin is something that's easily determined. So why has gold been used over the past 5,000 years as a store of value? There's something that's very important about incremental supply. So why is it gold and not silver? Let's say the price of silver increases, right? The price of silver increases from $1,000 to $2,000 an ounce. I'm going to leave this presentation and I'm going to head to the mines to mine additional silver in order to sell it on the market and capitalize in that increase in price. Throughout history, gold's supply has never increased more than 2.5%. That's because you can't synthetically create gold, and it is virtually impossible to extract more gold than 2% per year. The same doesn't apply to other assets. In Bitcoin, there is it's the first asset in the world where I can tell you the supply of Bitcoin 5 years ago and 50 years from now. So this is, I guess, there's many reasons why Bitcoin is amazing, but I think the best example to give is that it is the alternative, or this age's digital gold. It is a way to basically store your wealth in a way that isn't affected by fiat currencies. Again, I am going off on a tangent, but I do think it's an important tangent. In 1971, people always think, yeah, money is backed up by gold. The reality is, in 1971, President Nixon of the United States stopped the convertibility of dollars to gold, meaning the US government and other central banks around the world could print unlimited amounts of cash without actually backing it up by gold. This is something that is often overlooked, but is very important, because every new dollar that is minted reduces the dollar that you have in your pocket, its purchasing power. We spend our hours, we spend our days to get a salary in dirham or dollars. So if the US government's printing additional dollars, that reduces what I can buy essentially with the dollars that I've earned. So Bitcoin is a way to hedge against that, because no one can manipulate the supply. So that's why it's called hard money and not soft money. Ethereum is a lot more ambitious. Obviously, when it's more ambitious, that means it's higher risk. But Ethereum essentially aims to be the world's decentralized computer. What does that mean? In Bitcoin, I can send one Bitcoin to Ashiq. I can send one Bitcoin to everyone here in the audience. I'm not going to do that, but I theoretically could. We are giving away one Ether, though. But anyway, the point that I'm making here in Bitcoin is similar to payments. I transfer value from one entity or one address to the other. Whereas in Ethereum, we're able to do significantly more complex transactions peer-to-peer. And I'll talk about that in just a bit. So before getting into Ethereum, let me talk about the three different types of cryptos, or the three different types of digital assets. This is something that the Swiss government classified. Switzerland has been a global leader when it comes to crypto assets. Ethereum is based in Zug, Switzerland. Most of the crypto unicorns globally are actually based in a small city next to Zurich called Crypto Valley. And again, similar to many things in life, the Swiss are pretty prompt, and they've classified crypto into 3 different classifications. First, crypto or governance assets, which we're going to talk about in depth in this presentation. But the ones that I'm just going to briefly look at are security tokens. So security tokens are basically digital versions or crypto versions of existing securities. So think of stocks, bonds, sukuk, real estate. You can have a piece of real estate that is represented in the form of a crypto asset. So that's what I mean by security tokens. And the same regulations that apply on traditional securities should apply for crypto securities. If today the title deed, let's say I own a floor in Burj Khalifa. I hope that I do one day, but I don't. Let's say that I own an apartment in Burj Khalifa. Whether that title deed is a PDF or a printed file, it still follows the same regulations, similar with security tokens. It's just a new way of representing them. Third is payment tokens. Payment tokens is basically, I'm sure everyone here has heard of Libra's project, DM, or Libra. That is a payment token. What the Chinese government are doing with their digital yuan is also a payment token. It's basically a crypto asset that is backed up by fiat currencies that is intended for payment purposes. So, Ethereum smart contracts have actually unlocked, so utility tokens is the governance/utility tokens. It's a good question. So they're sometimes called native crypto assets, utility tokens, governance tokens. That is basically the first classification, which we will go into shortly. But before that, actually, any questions on what I just said? All right, cool. So as I mentioned, on the Ethereum blockchain, we're able to do significantly more complex transactions using smart contracts. So I'm going to briefly talk about some of the protocols that are built on Ethereum and why they are so revolutionary. MakerDAO is a lending protocol where you're able to lock up your Ethereum in order to get a credit line. So it is basically a borrowing platform. Today, if I have an apartment or if I have any type of asset, I need to go to a bank in order to tell them, hey, I want a credit loan of $100,000. They'll ask me what collateral I have. They will conduct their risk screening of my creditworthiness. And then they'll tell me, okay, Talal, we'll give you a credit line of $100,000 and we're going to charge you 10%. That's how it works in the traditional world. On MakerDAO, if you have $150,000 worth of Ethereum, you can lock up that Ethereum in a smart contract and take a credit line based on your collateral. MakerDAO doesn't care about your name, doesn't care about your email address. You don't need to disclose any other information because as far as they are concerned, your $100,000 loan is backed up with a deposit of $150,000 worth of Ethereum. Why is this revolutionary? Because you can take a loan within 60 seconds. I can't even open my banking application in 60 seconds. So it really is a revolutionary process, which is not very user-friendly at the moment, but similar to how the internet started, this will become easier to use over time. Another important protocol is called Yearn Finance. Yeah. Very, very good question. So Ala's question was basically, how do I trust MakerDAO that they're not going to take my Ethereum deposit and run away? In a bank, there is a central bank that regulates the activities of the bank and how they borrow and lend. In crypto, MakerDAO's protocol is open source, which means you can basically go in and verify the code yourself. This actually also applies to Bitcoin, right? Why do people trust Bitcoin? Most people here haven't logged into and viewed the Bitcoin code. You could if you wanted to, but the reality is Bitcoin has stood the test of time. If someone could hack Bitcoin, there's $1 trillion prize for anyone that's able to hack it. So to answer your question, there's two things that make you trust MakerDAO. First is that their code is open source, and you can go in and verify that yourself if you're technical. And if you're not technical, you can have someone that you trust that is technical to go in and verify it. But secondly, and more importantly, is it stood the test of time. They've facilitated hundreds of billions of dollars worth of transactions, and that basically means that others have trusted them, and that is usually a good sign. Yearn Fina, yeah, please. All right, so this is a point that I probably should have mentioned, but anything we're talking about on the Ethereum ecosystem does not interact with the old world. When you take a loan from MakerDAO, you take the loan in something called a stablecoin. A stablecoin is essentially a crypto asset, just like Ethereum, except it's backed up by a dollar. So you can take that, you receive that, the unit is called DAI, DAI. It's basically a dollar crypto. After you lock up your Ethereum, you receive that DAI token, and then that DAI token you can move absolutely anywhere in the world. You could bring that DAI token to CoinMina and then sell it to CoinMina and cash it out to your bank account. So I think there's an important distinction to make here. Regulated crypto exchanges are basically called fiat on and off ramps. They allow you to move from the traditional world onto the crypto world. You have dirhams in your account, you come to CoinMina, you buy USDC, Bitcoin, Ethereum, and then you can take that crypto and go to the crypto to crypto world where basically everything is possible. MakerDAO, you can't use your bank account. You can't even share your email address. All they care about is that you have enough collateral to facilitate the loan. So let's say I locked up $150,000 worth of Ethereum and I took $100,000 loan. My loan to collateral value is 2 to 3. And I need to maintain a specific loan to collateral ratio. Let's say Ethereum's price drops, which is, as we know in crypto, is possible. You have two options. You either pay back your loan. Actually, there's three options. The third is something that you wouldn't want to happen, but you can either pay back your loan or increase your collateral by depositing additional Ethereum. And then if your loan to collateral ratio reaches a specific threshold, your collateral is liquidated and your loan is paid instantly. This is all done with zero human interaction, which is why it is so insane. There is no employee that's saying, oh, is your loan to collateral value okay? It's all happening instantly. Yes, so again, the user experience is not absolutely amazing, but yeah, you can get notifications. And by the way, today's presentation is mainly an awareness. We don't offer these services at CoinMina, by the way. At CoinMina, we are a very simple service that solves the real problem. The problem is moving from dirhams to Bitcoin and from Bitcoin to dirhams or real. I said I wasn't going to promote CoinMina, and here I am telling you about our services. But yeah, this presentation isn't about that. Any other questions about Maker? All right, so I personally think that the MakerDAO founder will probably win an economics Nobel Prize in the coming 10 years because of how insane this financial innovation is. Actually, I will skip Yearn because Yearn uses Compound and Aave. Compound is the largest decentralized money markets. These are way too many buzzwords in the same sentence, but let me break it down. Basically, on Compound, you can borrow or lend, and the interest rates are not set by the central bank. They're not set by banks. They are essentially set by supply and demand. If there is a lot of demand for dollars, the interest rate increases. If there's many people that are lending, then the interest rate basically drops. And that happens every 10 seconds. Sorry, just going to drink some water. All right, yeah, masks on, please. I will exclude myself because I am a bit farther away than you are. So yeah, basically Compound and Aave are decentralized money markets that allow you to borrow and lend, again, in a permissionless manner. Trading protocols, something called Uniswap. Uniswap is basically a decentralized exchange. It is a new way that allows any individual to trade one asset with the other. This is a diagram of how a centralized exchange works and how a decentralized exchange works. So let's say I have dollars and I want to change them for Ethereum. You have a buyer, which is, let's say, Talal, going through a broker, which is CoinMina. CoinMina goes to a global market to buy that Ethereum, and basically there's another broker, another seller from the other side, which means that the process again goes through intermediaries. What does a decentralized exchange look like? It is basically, there is a smart contract that matches buyer and seller. There is no company, there is no human beings that facilitate that transaction. It is a smart contract that connects buyer and seller. This is actually a very, very interesting concept because it changes the way that people exchange value. Actually, before I get into potential challenges, does anyone have any questions? All right, cool. So, all right, sure. A smart contract is basically a piece of code that executes based on predetermined parameters. So let's say, I'll give you an example of a normal contract and a smart contract. If I rent an apartment from you, we sign a physical contract and we stamp it and we basically put it aside. And then I have to go and tell my bank, please wire ala X amount of dollars every month or every quarter, whatever is stated in the PDF file, which means the contractual agreement and the payments are separate. In a smart contract, the actual agreement along with the payment are combined. So let's say I sign a smart, or I have a smart contract between me and you for a rental. Every 3 months, money would flow from my account to your account with any individual or entity having to do anything. So that's, I guess, an example of a smart contract. And the Ethereum blockchain is the most popular protocol for that. I think this in hindsight might have been a bit too technical, but these are challenges for Ethereum and basically how the Ethereum blockchain aims to address them. The first is called EIP 1559. EIP stands for Ethereum Improvement Proposal. So is there such a thing as an improvement proposal to a blockchain? Yes. The Ethereum blockchain is a lot more flexible than Bitcoin. Bitcoin's code is very rigid, which is why it works as a store of value, whereas Ethereum is a lot more lean, which is why people think it's higher risk. It probably is higher risk, but higher reward. The other thing is Ethereum is going to move from proof of work to something called proof of stake. Can I see a show of hands of who knows the different? Who knows what mining is or proof of work is? Okay, so a third or half, and the same people, I'm assuming, know what proof of stake is, right? Okay, cool. Going back to blockchains, we said every block is verified and placed on the blockchain. This is actually the role of the miners. The miners are responsible to verify transactions and then place them on the blockchain. The Bitcoin blockchain requires you to spend electricity in order to verify transactions, and exchange for that electricity that you spend, you get back what's known as mining fees. people say that Bitcoin is not very environmental friendly because you actually have to spend a lot of electricity in order to verify transactions. Ethereum have proposed a new way of doing it called proof of stake. Instead of you spending electricity, you have to stake, you have to put your Ethereum as a miner, you have to stake your Ethereum. If you verify transactions correctly, you get your reward. If you try to act maliciously, they will take away some of the ether that you had staked. So it's a new incentive model where it will be implemented after Ethereum moves to what's known as Ethereum 2.0. Please. Sorry?
Who determines the gas fees? Are the miners?
All right, so it's actually different for Bitcoin and different for Ethereum. The gas fees, or it's called gas in Ethereum and it's called mining fees in Bitcoin. But the reality is it's an open market. Think of it as a highway, okay? You have a highway and you have cars going into this highway. So the cars represent the number of transactions, and the highway is basically the blockchain. If you have a lot of transactions that are trying to get into this highway, the fees are going to be higher. So to answer your question directly, the mining fees are determined by the number of miners that are currently online, which is the supply side, versus the number of transactions that are trying to get into this block, which is the demand side. So it is a variable number that is determined by the demand of blocks, which is the number of transactions that's happening, and the supply of miners that are trying to verify transactions. So that's how mining fees are determined.
Yeah, so I understand that Bitcoin was the catalyst, and as you said, it's, I suppose, stood the test of time. But what does it do now, today, that Ethereum can't do? What's its real world value now?
Okay, so actually, I'd look at it the other way around. Ethereum is a lot more complex than Bitcoin, so you have additional functionalities. However, the monetary policy of Ethereum can be changed, right? So Ethereum's, if I ask you, what is Ethereum's supply in 2030? You have no idea. I have no idea. No one has any idea. If I ask you what is Bitcoin's supply in 2030 on January 3rd at 10 p.m., I can tell you exactly how much the Bitcoin supply is. So that's why in the earlier slide, I said Bitcoin is hard money. It is designed to be clunky. It's designed to be slow because it is very secure. Similar to gold. You don't go to a supermarket and you pay your coffee with gold, right? It serves a different purpose. So Bitcoin is looked at as a digital store of value where the monetary policy is set in stone. Yeah, set in code, actually, not set in stone.
Okay, and just lastly, do you think eventually Ethereum will flip Bitcoin?
All right, so I've been in crypto for quite a while, and if I can tell you one thing is you should never make a definitive statement, because anyone that tells you, yes, this is happening, they have no idea. No one has any idea. It is such a new industry where it's impossible to say, yes, Ethereum is going to beat Bitcoin or Bitcoin is going to beat Ethereum. No one really knows. And the way that I look at it is, I don't know, it's too early to bet on one horse, but as a whole, it's very logical that crypto as an industry grows. Or in my mind, and I can easily make the argument that crypto as an industry is only going up. Maybe it'll have volatility on the way, it probably will, but in 10 years from now, crypto will be a significantly more important part of everyone's life than it is today. Any other questions? Okay, cool. With the exception of Bahrain and the UAE, no MENA government has really positioned itself to benefit from crypto and blockchain technology. But I do think that is something that is inevitable. I mean, there are countries that tried to ban the internet in the 90s. We all know how that turned out. So even the banks, even the financial institutions, the way that they viewed crypto 3 years ago is significantly different from the way that they view it now. They've moved from being basically to discrediting its potential to becoming more curious. And now basically every bank in the world is going to have to, crypto is going to become part of, in my opinion, and this is not something that everyone would agree with, if it's fintech and it doesn't involve crypto, it has an expiration date, because crypto is the future of finance. So this is, crypto is growing at over 100% per year in terms of users, and it is on track to have at least 1 billion users by 2024. This chart compares the users of the internet versus the users of crypto. So if we wanted to compare, the number of crypto users today is similar to the number of internet users in 1998. If you were going to bet that the number of crypto users was going to increase or decrease as a number or as a percentage of the world, I think the answer would be extremely clear-cut. But yeah, are you ready to get involved in crypto? If you are, definitely sign up to CoinMina. When I took this screenshot, Bitcoin was $18,000 and Ethereum was $563. No one knows what they'll be a month from now or a year from now. But I do think that it is financially irresponsible not to have at least 1% of your investable assets in crypto. You can invest on CoinMina with 500 dirhams. You don't need to buy a full Bitcoin. You don't need to invest your annual salary. You can start off with 500 dirhams. And I would suggest using a regulated exchange. But not suggest, I would stress that you need to use a regulated exchange, because I'm sure you heard the news in Turkey and South Africa. Unregulated exchanges are very scary because there's no bells and whistles. There's no, we send a report to the Central Bank of Bahrain every day. Literally, we have to send a report every day. And then there's a lot of checks and balances on how we custody our crypto. Yeah, I guess I will answer this question on your behalf. Everyone should be ready to get involved in crypto. And today we gave you quite a good reason to start. I mean, if you sign up, or if you've already signed up and attended today, you'll get a chance to win 1 Ether, which is today worth, I guess, $1,900 or $2,000. Thank you very much for your time, and I want to open it up for Q&A. Thank you. Please.
So thank you very much. It was a really enlightening talk. And when I buy and sell on your exchange, can I buy and then store it on an external hardware like a ledger or something like that, and then bring it back into the exchange for sale?
That is a very, very important question and a distinction that we need to make. In my opinion, if the crypto exchange that you're using does not allow you to withdraw your crypto, exit. You should not use any exchange. It's like you deposit money in a bank and they tell you, sorry, you can't go take your cash from the teller. So in CoinMina, you can deposit using 3 methods: wire transfer in dirham, dollars, euro, rial, whatever currency that you want, or you could do it using debit or credit card, or with crypto. So when you log into CoinMina, you can choose Bitcoin, Ethereum, Ripple, USDC, any of the assets we have. You click deposit, you will get an address where you can deposit crypto, but you can also use that to withdraw. So you can withdraw money from CoinMina using wire transfer or crypto. So let's say you have 10 Bitcoin in your CoinMina account. You can withdraw it all by basically putting your Bitcoin address, which could be your ledger, it could be any other address for that matter. But yeah, to answer your question directly, of course we allow that. And any exchange or offering that doesn't allow you to do that, in my opinion, should be avoided. And sorry, one very important distinction is that when you're depositing your crypto with CoinMina, or when you're withdrawing your crypto from CoinMina, we use the world's best custodian called BitGo. They are insured and they are regulated in the United States, which means even if CoinMina goes under or BitGo goes under, your coins are safely stored and insured. The value, the dollar value, isn't insured, but if you have 1 Bitcoin on CoinMina, you will have 1 Bitcoin in custody. So We use BitGo as our custodians. They're our partners, and they're basically the custodian of choice for pretty much all the top financial institutions in the world.
Thank you.
Hi, Talal. Thank you for that introduction. Could you tell us a little bit more about using CoinMena as an off-ramp? Because I've been in crypto since 2016. I've not once ever transferred crypto back into fiat. So could you tell me a little bit more about the process in the Middle East? Is there anything I should be apprehensive about?
All right, so cashing out crypto is a very important topic that should actually be tried and tested. I personally don't cash out, similar to your situation. I think of myself as a long-term investor. However, we still live in a world today where you need to have the peace of mind that if you wanted to cash out, you could. So, which is why we went for a federal license. Our license is a federal license by the Central Bank of Bahrain, which allows us to operate across the GCC. From CoinMena, you can get a clear statement of account from a regulated financial institution that shows your deposits, trades, and withdrawals. So you should have no issues. Our standard limit is 100,000 dirhams per week. However, our compliance officer would evaluate your case if you want more. We have customers that have limits of 5 million dirhams per week. But obviously, they have to provide source of funds. And because we're a regulated exchange, I wouldn't be able to influence that decision. The compliance department would be the ones that would say, okay, this is your track record, this is your history, we assign you X amount per week. Our basic limit is 100,000 dirhams per week in terms of deposits, withdrawals. So you can withdraw in dollars, euro, dirham, riyal, Omani, Kuwaiti, Bahraini, and did I miss one? Probably, but yeah. Those.
And then if I withdraw to my bank account here, is there any risk of any tax or questions from the bank as to the origin of
all right,
the
so
source of these funds?
Since you mentioned tax, alhamdulillah, we live in the UAE where tax is not an issue. However, as I said in the beginning of the presentation, no financial or tax advice. I am not the person to ask about taxes. But I'm the person to ask if you want to withdraw your crypto to your bank account, because we do that under a regulatory framework that's approved by the Central Bank of Bahrain. And we have a correspondent bank that allows us to facilitate dirham transfers.
Okay, thank you, Talal.
And if you face any issues, I'll share my contacts. And because it's very important that like you have a peace of mind that I can deposit and withdraw with no issues. Actually, at the moment, we are doing our internal testing for our UAE entity. So in the coming couple of weeks, you'll be able to link your bank account with CoinMena. We're having local deposit in the UAE. Yeah, please.
Yeah, the question goes actually directly. If you have direct deposit from the bank, that means there is zero charges other than the trading fee of that 0.75%?
So good question. Deposits, we don't charge you anything on deposits.
Yeah.
On the trading side, we charge you 0.75%, and that's on the trading when you move from dirham to Bitcoin or from Bitcoin to dirham.
Okay.
To be completely honest, 0.75% is not, we're not the cheapest in the market, but we're the most, no, I wouldn't say the most. There's many other legitimate projects, but we've done everything on best practice. We use BitGo, we are insured, we are Sharia compliant, and then we could charge you 0.5% instead of 0.75%. But I think there's an issue where, not saying you would be, but there's many people that are penny smart and pound foolish. In Turkey, the exchange used to charge 0.01%. And people used to love it because they used to charge 0.01%. What happened? They took the $3 billion and bounced. So if you think of it, especially in a volatile industry like crypto, right? 0.75% is, during this presentation, we've had 10 times of up and down in terms of 0.75%. So
now what I'm trying to understand, because I've been doing purchase with my bank and they charged me 3.49%. an additional 3% for online trading. So that's why I'm saying I ended up
with CoinMina?
no, not CoinMina.
Okay, yeah.
No,
I
no.
was
But
gonna
that's why I'm asking if you link the bank account directly and you transact dirham to Bitcoin directly, there is no other charge other than that.
Yes.
So not even the card.
Card, لا, wait. Okay, so the way that it works in crypto, if you want to deposit or transact with a decent amount of money, and decent is obviously contextual. My decent isn't like Bill Gates decent, right? But if you want to do a sizable transaction, I would suggest doing it in wire, because on the credit card side, we charge 3.5%.
Oh, debit card.
Sorry?
Debit card.
Debit and credit card. This is something that is beyond our control, because we do use a credit and debit card provider that allows us to facilitate the transaction. And then it's also important to be transparent why we charge the fees. Why do we charge you additional fees on credit card transfers? Because we don't receive the money instantly. We have to go to the credit card processing company and tell them, please wire us the money. So there's the cost of capital there.
But you're saying the direct debit from the account is available from next week?
Today, no, it's been available for the past 2 months.
Okay.
You can wire dirhams from your UAE bank account to our account in Bahrain. I can show you my CoinMina account later. I use First Abu Dhabi Bank.
Yes, same, actually.
First Abu Dhabi Bank. You can wire dirhams from FAB to our account in Bahrain, and the transaction fee is about 12 dirhams. Which is quite competitive in my opinion. But again, I do think that fee sensitivity makes sense if you're doing, I don't know, $100 million. You possibly could be, but
not that much. No.
Okay, cool.
But it was quite a high charge, so that's why I asked. Yeah.
Look, the worst. Okay, so the worst thing that happens is the FX charge, the foreign exchange charge, because I don't mind paying fees. I mind when I'm charged hidden fees.
That's exactly what.
So hidden fees really piss you off, me off, everyone off. And yeah, at CoinMina, we pride ourselves that we have a transparent fee structure. If your bank charges you any hidden fees, reach out to support and we'll make sure to make you whole. Sorry, the gentleman in the back.
Thank you. There's a few players on the market now, right? There's Rain, there's Facet coming up, there's BitOasis, and you've said some of the great things about CoinMina, but why CoinMina over these other ones?
So I won't talk about my competitors. I respect everyone, and I think rising tide lifts all ships. Something that's also important to have as a mindset, right? I don't want to. No exchange in the Middle East has more than 50 active monthly users. We are in a jurisdiction, or in the MENA region, we have hundreds of millions of people. So I'm actually going out to explore new, uncharted territories, bringing new people into crypto. What differentiates us from the competition? Well, first of all, we're 2 months old, so we have a point to prove. However, we're the only Sharia compliant exchange, which is something that in Saudi and the Middle East is quite important and reflective of the way that we conduct our business. Second of all, we are insured, right? Deposits at CoinMina are insured because we use BitGo and we use global top-class custodians. And we have a lot of tricks up our sleeves in terms of additional features. So far, crypto exchanges in the Middle East have provided a reliable / boring service. You deposit dirhams, buy Bitcoin, salam alaikum. Which is good, right? But it's not what we strive to be. So sign up and we'll keep you posted with our updates. We have a lot of cool features that are coming up. We do also pride ourselves that we have top-class customer support. If you are a CoinMina customer, you will be treated as if you are working with a private bank. We respond to you almost instantly. I think in terms of our customer service, obviously in Arabic we say al-irdu b'ain umm ghazal, which means I'm biased to my own exchange, and I'm biased to crypto, so I let you make the decision on what differentiates us from competition.
Quick question on the registration. I just noticed you've made it mandatory to upload the bank statement. I would like to know why.
All right. So uploading the bank statement is something that is extremely important for multiple reasons. First of all, we make sure that a regulated financial institution in the GCC has already completed your KYC and AML, so we can piggyback off their due diligence. But most importantly, we're in the crypto trading business. There is any new technology, whether it's the internet, whether it's crypto, whether it's electricity, is sometimes or often used by criminals for illicit activities, right? I was presenting to Standard Chartered's management team yesterday, but they were like, yeah, but crypto has a lot of money laundering. I'm like, but dollars have a lot of money laundering as well, right? If it's not the medium that is bad, it's how people use it. So by receiving your bank statement, our compliance officer has a much better understanding of your source of funds, whether you're channeling money for someone else, whether you're the ultimate beneficial owner. So I do understand that there are other exchanges that don't require bank statements, but the reality is we see this as a marathon and not a sprint. One of the biggest exchanges in the world was stopped in the UK yesterday. They were banned in Canada a couple of days ago, and that's because you have a trade-off. How easy or relaxed you want to be on the anti-money laundering side versus how quickly you can grow. At CoinMina, we want to achieve fast growth, but we want to do it in a sustainable way because anti-money laundering, information security are some of our top priorities. So I hope that answers your question. And one very important thing is that at CoinMina, we have top-class privacy. I personally hate giving my bank statement to anyone. It's very personal. So even myself, I can't access, if you sign up on CoinMina, me and the founders, we can't access your bank statement. There is a very clear matrix of authority where the chief compliance officer and his compliance analyst are the ones that are able to view your data. That's something that we have a very strict process on.
Yeah. Does CoinMina allows derivatives trading, or is it only going to be spot?
Sorry,
derivatives. Will you allow futures or derivatives?
Futures?
Yeah.
La, we don't do futures at the moment. We are a spot exchange, which means you can move from dirham to Bitcoin and the approved crypto assets that we have. We recently added 4 more crypto assets, Chainlink, Uniswap, and USDC. And then we're also adding more in the future. But on the futures and derivatives side, that's not part of our current offering. And in all due transparency, I don't think that we'll launch it in the near future.
And how many assets do you currently support?
How many
assets? How many crypto assets?
10, if I'm not mistaken. 10. I should be able to give you the exact number, but I think it's 10. Bitcoin, Ethereum, Bitcoin Cash, Litecoin, Ripple, USDC, Litecoin, Compound, and Uniswap. Yeah, 10.
In continuation to the question of bank statement, now people who are working, it's okay for them. How about the housewives? And
there is an option where if you are unemployed or if you are self-employed, you can click that, and basically our compliance officer will you can submit without a bank statement. You would be assigned a slightly smaller limit until our compliance officer reviews your case. So at CoinMina, one of our goals is to democratize access to finance, and this is something that's very important. If you don't have a bank statement, you can still work with CoinMina.
And whether they can use our card, like our wives can use the husband's card or something, or they need the card issued on their name itself?
No, that is something that is, no, that's not something that's possible. Username, KYC is the same person that deposits and withdraws.
Okay.
But again, at CoinMina, we want to democratize access to finance. So we accept any and everyone that complies with our KYC AML requirements that's a resident in the GCC. Sorry, I had a question.
It's a couple of questions. I think it's been asked previously, but want to make sure that are you a broker or an exchange?
It's a very good question. Okay.
And if it is an exchange, do you have your own soft wallet where you can stake and earn interest? That's 2. And again, as far as the assets are concerned or the other altcoins are concerned, you have 10 at the moment. Do you plan to have more in the pipeline?
Yeah.
These are my questions.
All right, great. So the first question, CoinMina is basically regulated as an exchange. However, we do operate as a digital brokerage business. And basically, we tap into global liquidity providers. If you come to CoinMina today and you want to buy $500 million worth of Bitcoin, we'll do it in less than 24 hours. Why? Because we tap into global liquidity providers. One of our investors is FTX, which is one of the fastest growing exchanges in the world. They do over $20 billion a day in volume. So there's a trade-off there. The second question you asked was about altcoins. We started with 5 assets. We added them to 10. And inshallah, we are planning to add more because we try to think that we listen to our customers. So we will add assets that our customers want. And you had...
Do you have staking options?
Staking. So at the moment, we don't have staking. We are working with the Central Bank of Bahrain to allow us to basically have passive investment opportunities in terms of staking. I actually think Ethereum staking is one of the most promising opportunities. I personally do it at home. And inshallah, that's part of our roadmap. But as a federally regulated exchange, the risk appetite for the Central Bank of Bahrain, rightly so, is quite low. Because we have seen jurisdictions that have been very easy with regulations, and then it comes and bites them in the... Yeah. That's why we're being... to answer your question directly, it is part of our roadmap, but it's not a service that we currently offer. Aida, and then...
One question I have.
Please.
So building on the same question, so what are your liquidity providers? Who are they exactly? And the second question would be, you said we'd soon be seeing something in CoinMina UAE. Does it mean that I can transfer, it will be a local transfer for me to send money to CoinMina? That would simply make the whole process a lot easier than sending money to Bahrain.
All right. So first question you had was...
Who are your liquidity providers?
Okay, so liquidity providers. So we mentioned that FTX is one of our investors and liquidity providers. We also work with a company called FalconX, BlockFills, and Kraken. These are 4 different liquidity providers, and we source the best price from any of these liquidity providers. So we don't have a Catholic marriage with any of them. We basically source the best price from any of these liquidity providers.
Are all of these regulated?
Yes, of course. We have to get approval from the Central Bank of Bahrain on any liquidity provider that we use. Because your liquidity provider, you are doing financial transactions with that. You're sending them money and getting back crypto. So not only are they regulated, they are regulated in approved jurisdictions. And then to answer your question, we will have withdrawals and deposits in the UAE in the near future. So this is something that we're really excited for and should make life significantly easier.
Yes, thank you so much. You've mentioned a new incentive when it comes to mining Ethereum. Is this up now? And so it would mean that indeed you will have to have Ethereums to be able to mine. Does it change anything to the process of mining itself?
Yeah,
eventually?
so at the moment, Ethereum mining is done with proof of work, which is the same way Bitcoin is being mined. You spend electricity and you either get Bitcoin or Ethereum back, depending what you're mining. Ethereum 2.0 is the proof of stake, and that's not something that is live yet. It should be launched at the beginning of next year. But you can do it from now. You can move your Ethereum from Ethereum 1.0 to Ethereum 2.0 and start accruing profits. It will change the process of mining, and it's very difficult to give an exact timeline on when Ethereum 2 will be launched, but it's scheduled at the start of next year. I think there was 2 questions. Yeah. All right, good question. So our 2 upcoming assets are Cardano is one of them, Polkadot is the other. So Polkadot and Cardano, these are 2 smart contract platforms that are trying to compete with Ethereum. But Solana also we still haven't announced. It's not official, but we are obviously working on. I'm personally a very big fan of Solana. Please.
Hi. Okay, so first of all, thank you for the explanation you did at the beginning. I'm novice, so I don't really understand the world of crypto that much. So it was very good to see how you sort of explained everything, which was really nice. But
Quick question: how confusing out of 10 was it?
Well, it's very confusing. I think crypto is like maybe 9 out of 10 confusing, but you made it maybe a little bit less. I would go now to around 7. I'm still quite confused when it comes to this world. So one of the questions I have is because recently we've seen the rise and fall of crypto in terms of their value. What causes that rise and fall? So as someone who is kind of playing with it, I don't understand it, but I do buy a little bit here and there every now and then, just because everyone is doing it and it's the thing to get into. But just for our understanding, what do we need to watch out for when we are buying that tells us we should sell or we should buy? What's causing that rise and fall? Because you mentioned gold, you mentioned dollars, and those make sense to us. It's pegged on the economy, it's pegged on what's happening in our, around the world. Is crypto the same? Is that the sort of stuff that we need to look for? So that's one question. And the other one is a bit simple one. Do you guys have an app or is it just a web service?
Okay, so I'll start off with question 2 because it's assist to allow me to dunk. App is coming out soon, 2 to 3 weeks, inshallah. We're currently doing internal user testing with a focus group to make sure that our app actually serves what our users want. To answer your other question about crypto's rise and fall, it's very important to acknowledge that Bitcoin was 29,000 at the beginning of the year. We're currently at 34, which means it's above 20% increase year to date. It's impossible to have any asset in the world that goes up only vertically, right? If you have a short time frame, crypto is not for you. If you have a long time frame, Bitcoin has compounded at a rate of 200% per year. So if you want to day trade, if you want to, if there's a drop of 30%, you exit, crypto is not for you. Or I guess to answer your question on the rise and fall, crypto is a unique financial asset that the world has never seen before. There is no central party that dictates price. It is 24/7, 365. So it is only logical that you have such volatility. But there's also one other important part that I want to loop it back to the initial part of my presentation, which is basically the price elasticity of supply and demand. Any asset in the world, all right, let's take Bitcoin as example. If the price of wood exploded, what happens? People go cut trees and they flood the market with additional wood, which drops the price. In Bitcoin, there is no way you can change supply, which means any change in demand can only be reflected in the price. So we will continue to see volatility because crypto is currently in a price discovery phase, right? Facebook stock, when it was first launched, was $35. 2 weeks after, it was $18. Now it's in the hundreds, right? So volatility is, people say, yeah, it's volatile. We want volatility. Without volatility, investing is meaningless. You just need your volatility to be trending upwards over a longer time frame. Amazon stock has dropped over 70% twice in its lifetime. No one mentions that because over its period, Amazon has done insane returns. So I guess no financial advice, but guidance, I guess, is don't put all your eggs in one basket and don't buy all at once. This is something called dollar cost averaging. Every week, every month, I personally buy Bitcoin every Thursday for the past 6-7 years, regardless of what the price is. Because that way I remove emotions out of it. Because as humans, we're emotional creatures that don't necessarily have very good discipline when it comes to investing. So decide on an amount you want to save. You want to you're basically willing to invest in crypto and follow a plan until you're proven until that plan is proven to not work for you. At CoinMina, we are regulated for portfolio management. So this is also something that we'll hopefully be doing more of in the coming months and years. Because yeah, as you can see, I'm quite a talkative person, which means a lot of my friends and family come tell me, Talal, invest this money for me or tell me what to do. And that process can be commoditized and we're working towards that.
You said you're a long-term investor and you've been investing for the past 6-7 years. When do you think you're going to sell or are you going to sell?
I actually think that my kids, inshallah, will inherit my Bitcoin. I don't plan on selling it anytime soon or ever, to be honest. Because the way that I see it, it's like a plot of land, right? It is, okay. I don't know about, this is, in Jordan, there's an area called Abdoun, which is prime real estate, right? Anyone that's from the older generation made a lot of money because they bought prime real estate. Anyone that bought a piece of land close to DIFC is now very rich. Why? Because it's prime real estate. We are moving to a world where assets are digital and Bitcoin is Manhattan. It is the prime real estate that you need to own in order to have financial freedom in the coming 20 years. I will be able to lock up my Bitcoin and take a loan against it. I won't have to sell it. To answer your question, I don't plan on selling my Bitcoin ever. I actually plan on increasing my stack as we go.
What role do you think technical analysis and technical indicators have over the prices of all assets?
All right, so there's a concept called confluence, where more than one factor has to come into play for you to make an objective decision, right? I'm not the best at charting. I actually think it's crazy that some people think that they can draw lines on a chart and predict the future. No one knows what's going to happen tomorrow. It can be an assisting factor in your decision-making process. However, no matter what chart lines you put, when China banned Bitcoin only a couple of weeks ago, obviously that was going to create sell pressure that was impossible to predict with a chart. So technical analysis can be a complementary factor to your decision-making process. However, I'm the worst trader you will meet. I don't trade. I'm a long-term investor. I don't buy and sell. I don't try to time the market. There's people that work with me or I work with them that are very good traders. I'm not one of them. So technical analysis is something that's very popular in stocks, commodities, bonds. The thing that I think is very interesting is something called on-chain analysis. On-chain analytics, if you're interested, reach out to me later. I'm happy to geek it out with you for an hour or two. But basically, because Bitcoin and crypto is transparent, you can actually track movement of Bitcoin dollars in and out of exchanges. So let's say Binance, right, or Coinbase, one of the larger exchanges in the world. Someone deposits $2 billion worth of Bitcoin. They moved it from a wallet to the exchange. It is logical to expect that there'll be sell pressure, right? Or if someone deposits a lot of stable coins on an exchange, it's logical to have buy pressure afterwards. So I wouldn't base my investment decision on one factor. I would use a compilation of factors and then make our decision accordingly.
Thank you.
So I'm directing the questions back to y'all. How quick are the transactions now, since the transactions will go into your Bahrain account? And of course, again, we will not look at withdrawing the funds, but if in case we want to withdraw, how quick depositing and withdrawal both? And you did mention about the transaction fees when you're investing, but if there's a transaction fee when you're withdrawing the funds?
It's a very good question. So wire transfer is, our average is 2.6 days at the moment. We're working to get that lower. However, this is not something that is fully in our control, unfortunately. We do have to depend on banks and the correspondent banking system, which I hate, and SWIFT. It is an outdated system that will not survive the coming 50 years. If you send dollars from Dubai to Bahrain, the dollars actually go from your bank to the USD correspondent bank, to the Federal Reserve, to a correspondent bank in Bahrain, to our account, which is, again, an Arabic saying, which says, "Wain danak ya juha," which means, "Where's your ear?" And I tell you, "Yeah, that's my ear." Okay. That's how money moves around the world at the moment. To answer your other question, our debit card transfers and credit card transfers are instant. Right? So you can pay a couple of extra % and have your money deposited instantly. On the withdraw side, we have a very transparent fee schedule. which we think is quite fair. And yeah, crypto withdrawals are instant. Maximum within 24 hours, you can withdraw any amount of crypto from CoinMina. And then on the fiat withdraw side, again, it depends a little bit on the banks, but so far our deposits and withdrawals have been working great. That will definitely improve once we have our account set up in the UAE.
I have one more question. So the amount I invest on crypto, it's my decision. So for holding whatever the balance in the account, there's no problem, or is there any, I don't know, any conditions I should look at, or?
So I said our basic limit, if you submit your passport and bank statement, we will give you 100,000 dirhams per week. That is deposits and withdrawals and trading. You can apply for higher limits. As I mentioned, we have customers with 5 million dirhams limits per week. If you keep money at CoinMina, the money is segregated into a client money account. And we have daily reconciliation that we send to the Central Bank of Bahrain. So I don't want to blow my own exchange's horn, but our process is top class when it comes to protecting client assets, because that's literally our top mandate.
Thank you.
Thank you. So thanks, Talal, again. That was great. I have a question. Are you planning to do in CoinMina peer-to-peer service? Like I can sell to you, you can sell to me if I'm a member or a user in CoinMina.
Look, the P2P landscape is one that is very interesting, but this is something that the regulators are not very keen on. To be completely honest, I kind of understand why. So it's not in our short-term roadmap. And I would advise anyone using P2P services to be cautious, because you have no idea the AML side of the other side of the transaction. So again, being penny smart and pound foolish. By saving, I don't know, 10 dirhams, you could risk engaging with a financial transaction that might not be fully compliant, and we all know that that's not worth it.
Hello. Yeah. Just wanted to ask, what is the maximum leverage you're providing, and also the available commodity, like you people are dealing only with the cryptos or with commodities and currencies and other varieties as well?
Okay, so I'll start off with the leverage question. We do not provide leverage at CoinMina.
It's only for
spot. It's a spot exchange.
One,
Yeah. It is a spot
okay.
exchange, and I do think that leverage products are carry significantly more risk. So even if you use leverage products on other exchanges, I'd advise you to be cautious, because you could lose money by doing so. At CoinMina, we don't provide any leverage.
So this is not for day trading. Basically, it is for the long term.
Yeah, I mean, you could trade on CoinMina, but we're not designed for that at the moment. And to answer your question on commodities on other assets, there's a saying that I like, which says, "Don't bite more than you can chew." Right? We launched 2 months ago. We want to be the best crypto exchange and crypto asset provider, and after that, we're going to go into all sorts of financial assets, ones that you can't even imagine at this stage.
I think we're done for this session for now. So thank you, everyone. There are a few people waiting in the back, so I think we're going to do a substitution sort of thing. And yeah, if anyone has questions, we can be here. And Talal can rest up.